All right, friends, this is it. In the video today, I'm going to share with you, hypothetically, how I would deploy $10,000 into dividend stocks and ETFs if I were starting over again right now in 2025. And so in my last video, which I will link to in the pinned comment below, I shared the 5 themes that are really informing how I go about this exercise right now in 2025. Because the way that I'm looking at the world, the way I'm looking at dividend investing, it has evolved because things are changing. And so the 5 themes that helped me really build the portfolio I'm sharing today, they're in the last video, and that's in the pinned comment. But I want to get right into it. I want to share with you right now in 2025 how I would hypothetically deploy 10,000. Check it out right now. This is the hypothetical portfolio. There are 8 different positions, and you can see that 3 of the positions are ETFs or exchange traded funds, and the rest of the positions, the other 5, are dividend stocks, individual stocks. And so I'm going to go through each of those in the video today. But the first high-level thing that I want to share, I think this is going to surprise a lot of you. When I did these videos in the past, I went through these $10,000 videos over the years, and I'm going to link to some of them in the pinned comment below. From the past, things were really different. Now in 2025, as I look forward, if I were hypothetically starting over right now with this $10,000, how would I do it? It is so different in the past. And the first thing you will notice is that 65% of the capital is going into ETFs, exchange traded funds. If you had looked at PPC Ian back in the day, this would have been impossible. This is such a change for me, and it is an evolution of my strategy going forward. Now, for my personal portfolio, which I share over on my Patreon, on Corner Patreon, I'm going to link to it in the pinned comment below. On Corner Patreon, I share the percentage allocation to each position. I have 39 positions in my real portfolio. It is a seasoned portfolio that's been around for a long time, and slowly but surely, I'm now adding to ETFs. It's my main focus, and over time, I think those ETFs are going to take a pretty huge position in my portfolio. But if I were starting over, I wouldn't have so much catch up to do. I would just start out that way and off the bat just deploy 65% into those ETFs because of many of the reasons I discussed in the last video. Anyway, as you can see on the screen, check it out. So I have 2 sets of rows on the screen. And the reason I did this, I broke it up. There's only 8 positions, but I repeat them, is just because there are so many columns. And to show it on the screen for all of you, I had to do it this way. So there's 2 sets here of 8 rows, but the 8 rows are the same positions, just different metrics as you go through the columns. So I stack rank these in order of descending capital allocation, and you can see the number 1 position that I include is an ETF, SCHD, or the Schwab US Dividend Equity ETF. I'm going to include a video or 2 related to that I've done in the past in the pinned comment below. Now, which themes does this apply to? Well, there's really 2 themes. The first theme that SCHD fits is just going from PPC Ian to ETF Ian. But the second theme is just being more cautious in 2025 in this rapid time of change that we are undergoing right now. I want to be a bit more cautious, and ETFs with the broad diversification help me do that. And so this is theme 3 as well, being more cautious. But as you can see, let's just go through this really quickly. I've talked about it a lot in the past, and I love this ETF. Over time in my real portfolio, I share the percentage allocation to each position over on Corner Patreon. I plan to make SCHD my largest position. And by largest, I mean in my real portfolio, because I don't sell stocks, I don't sell positions. Well, generally I don't. I don't intend to. There are exceptions. I have to build SCHD up from scratch. Over time, within the next year or so, I hope it will get up to at least, say, 8 to 10% of my portfolio, which would put it in the first position. But here, in this hypothetical portfolio, 45%. And so I love that. Right off the bat, 45%, making a big statement with SCHD, and it has a starting dividend yield. You can see this in the second set of rows on the bottom, 3.89%, which is not bad considering that they are growing the dividend on average by roughly 10.88% per year on average. So That one is SCHD. Now, it probably will not surprise you. My top theme was going from PPC Ian to ETF Ian. There are so many reasons for that. But the second position, it's also an ETF again, and this one is SCHY, the newest ETF I've added to my personal dividend stock portfolio. Now, as you can see on the screen, check it out. SCHY is basically the international equivalent to SCHD. It is the Schwab International Dividend Equity ETF. I'll link to my recent video on that in the pinned comment below. I love these ETFs because they're algorithmic. They have huge dividend growth over time. They're not actively managed, they're algorithmically managed. And so the management fees tend to be low. And I don't have to rely on humans to make decisions in these. The algorithm does it for me, which I actually prefer. So SCHY fulfills theme number 1, ETF Ian, but also it's a pure play. It fulfills theme number 2. I like pure plays these days, either US or international, and this gives me huge international exposure, but on a pure play level. These are a lot of companies here that actually operate internationally with a little bit less US exposure. And so that's something I believe in investing right now from a theme standpoint, because I see our world getting a little bit more kind of locally focused over the coming years. Anyway, 1,500 or 15% goes into SCHY, and the starting yield, coincidentally with SCHY, as you can see in the second set of rows below, is also 3.89%. It's the same as SCHD right now, and it's too new to rate the dividend growth of this one. I can't get great numbers on it because they've changed the payout schedule. It's a newer ETF, but over time, I will be very actively watching the dividend growth on this one, and I think it will be pretty solid. I expect it probably to be at least 6 or 7% per year on average, but only time will tell. Time will tell about SCHY. But right there, I have 60% of the portfolio in these two ETFs. And so moving on, let's go to position number 3. This is another one that will probably surprise people who have been here on PPC Ian for a long time, but it is a newer position that I own. And again, I'll link in the pinned comment below to the video I did on this one. I have a lot of links today, everyone. This channel, if you have not subscribed already, I invite you to do so. There is a wealth of information here. I have so many videos, so much to reference, but let's do it. Number 3 is Alphabet, or Google, as so many people know it. But as you can see on the screen in front of you right now, this may surprise you for a dividend stock investor. But Alphabet, for me, I put 10% into it, or 1,000 out of the 10,000. This is about theme number 4, which is the future, betting on the future, looking towards the future. And I'm buying this right now at a pretty reasonable forward PE of 18. I'm actually buying this for real in my real portfolio. My patrons know that. What I like about Alphabet is it does have a starting yield. It's a really low at 0.49%, but there's a lot of room to grow. The payout ratio is only 8.8%, and the dividend growth rate, they just did their first dividend increase. It was 5% year over year. There's a lot of room over time for Alphabet to increase the dividend. And I think that Alphabet, over the long run, could be one of the great dividend growth stocks of the future. And that's why this falls into that theme. So we got through the ETFs. I got my diversification. I got my international exposure. I got kind of sleep well at night. I'm moving into this position 3. I am really here positioning myself for the future of dividend growth investing and a future engine of growth for my portfolio. And that's why I select Alphabet. I believe here it's also at value levels. And so I enjoy buying Alphabet at these levels. I've done a whole video on it, which I'll link to in the pinned comment below. But I got to keep going to position 4. This one is more of an OG classic PPC Ian pick. This will not surprise you too much, but as you can see on the screen in front of you right now, it is PepsiCo. So position 4 is PepsiCo. This is really falling under theme number 5. This is kind of a hedge, if you will, and it's a hedge against uncertainty, because in uncertain times, we all need to eat. And PepsiCo provides snacks and foods and beverages. and it's also on value. I mentioned in the last video, when I do buy these hedges or these value stocks, I really like to buy them on value. And with their forward PE of 16 right now, it's on the lower end of the range for PepsiCo. But what I like even more is the starting yield of 4.44%. This is one of the larger core positions in my existing legacy portfolio, and I am actually still adding to it a little bit over time. I share that on my Patreon. But this one is number 4, and it is a solid 10% allocation to PepsiCo. Being an old school core stock that I have a lot of respect for, it's of premier quality. And yes, they are facing some challenges now, but I think they will be just fine. The 5-year dividend CAGR is 6.83%, which is a great growth rate on average per year. It probably will slow down before possibly increasing again in the future. It's important to realize that with the value stocks, with dividend growth investing, with the classic stocks, there are ups and downs to any business cycle. I think PepsiCo right now is in a soft business cycle. With that said, it's still a very solid company. I don't believe they're going anywhere. I don't believe the dividend is at risk. I think they will continue to increase the dividend, and it's a great hedge for my portfolio and a core stock and probably a driver of growth over time. But let's keep going. Position number 5. This one is going to surprise you. Another ETF that I had to include in the portfolio. Check it out on the screen right now. This is an ETF I have not discussed on my channel before, but it is in that Schwab family of funds. As you can see on the screen, check it out. Position number 5 ETF is SCHG, and this is the Schwab US Large Cap Growth ETF. I only put $500 in this one, or $500 of the 10,000, and this is how I get to the 65% in the ETFs. Look, when I construct this hypothetical portfolio of 10,000 here in 2025, I'm looking at kind of the future. And when I look towards the future, I want to have some growth in the portfolio and some dividend growth. And that's why I included Alphabet. I think it's going to be one of the great dividend growth stocks of the future. But I also think a lot of the tech stocks that are included in SCHG are going to be some of the great dividend growth stocks of the future. Now, look, the starting yield is really low. It's only 0.4%, which is in the same neighborhood, I would say, as Alphabet. And over the last 5 years, the dividend has actually gone down for this. And so this is not really about the short-term cash flow generation, but it is about looking out a decade from now, 2 decades from now. How will I drive future growth in the portfolio? A growth engine, if you will, of dividends for the future. I believe a lot of those names will be in SCHG. And so I really wanted to position the portfolio in a strong way to take advantage of how our world is changing, how our economy is changing, where a lot of the growth engine these days, it is in the tech stocks, it is in the stocks of the future. So that's position 5, SCHG. Put in the comments below if any of you are familiar with this ETF. It's another fun one from Schwab. But of course, I limited that position to only 500 because it does have a lower dividend. Anyway, let's keep going. As you can see on the screen right now, I want to get to position number 6. This is one that my wife owns, and I haven't talked about it for a while on my channel. Maybe we'll do another video at some point, but I love Target here because it's too a pure play. This one is not a pure play internationally though, the way SCHY is. It's a pure play in the US. They don't have stores, to my knowledge, at this time outside of the US. And I think that's probably a good thing in the world right now. The way the world is, just for being an investor, I like pure plays. I discussed this in my last video, but this is also a hedge. This is a stock, a company that provides everyday essentials that people need no matter what. I allocate 500 or 5% to it. Everyone needs to shop. Everyone needs to buy those daily essentials. And as I said in my last video with the hedges, with the value stocks, I like to buy them on value. And I see Target as a value here. Yes, they have some issues they're overcoming. But look, the PE is a 13.39. I love that. What I also love about Target is the starting yield. It's the highest of the bunch so far. We're going to get to some higher yields just in a minute, but this one's a 4.68%, and they've been growing the dividend on average over the years by 10.89% per year on average. That will probably slow down, but the payout ratio is still a respectable 62%. I see some value there with Target. I think it's good to have retail in the portfolio. I like it here for the reasons mentioned. And so I'm excited about that one. That's not one I talk about too much. All right, so stock number 7. This one is, I would say, more of a classic kind of PPC Ian OG kind of thug lifestyle investment. So look, everyone, I'm going to get to that one in a minute, ALTRIA, but I'm just going to tell you, I'm doing a portfolio update on my Corner Patreon right now, and you're going to love this. So I actually surprised myself. ALTRIA now is my number 2 position in my portfolio. And so I, in the past, have been rewarded by selecting these stocks that are kind of controversial, that have high yields, but great fundamentals. They have an element of risk to their business, but I believe they can overcome the risk. And I kind of see Pfizer there right now. And so I had to throw Pfizer in there to kind of throw homage towards my roots as a thug life value dividend stock investor. And look, there is risk with this one. That's why it's lower on the list with a 5% allocation at $500, but that starting yield boosts the overall portfolio yield. And this portfolio is a reflection of me. As you can see on the screen, just check it out right now. This overall portfolio average yield is 3.78%. That is not so dissimilar from my real portfolio. For me, a sweet spot in 2025 is a starting yield in that range. I think that's a good range. To get to that range, because I have some lower payers in here like Alphabet and SCHG, I need something that counterbalances it. And I counterbalance it with stocks like Target, but moreover with stocks like Pfizer that have a starting yield of 7.12%. I'm buying Pfizer these days. My Patreons know that as well. It's a hedge. It's a value stock. I'm buying it on value. Theme is being a hedge. And this one has a forward PE of 8. This one at Pfizer has a payout ratio of 57%. The dividend growth is low, but a starting yield of 7.12% does a lot for me. And look, there is so much worry these days in the news. As consumers, as people, as citizens, the news is coming our way every day with something different. And some days I see stuff that worries me about big pharma. Other days I realize, are they just putting on a show? Is any of this even going to come to fruition? What I've kind of concluded is on a prudent, lower allocation of capital for my personal situation only. I never share investment advice, just my personal situation for fun and entertainment. I have these OG Thug Life stocks like Pfizer, and in the past it was all the sin stocks like ALTRIA, which I'll talk about in a minute. I've done well with these over the years, and for me right now in 2025, Pfizer makes sense for my personal situation because of those reasons. And so that's position 7, but let's keep going. As you can see, the last one, as I already shared, is ALTRIA. ALTRIA is the number 2 position in my personal dividend stock portfolio, and I'm trying to lower the allocation of ALTRIA. I don't sell, but I'm taking all the distributions from it, or the dividend distributions, qualified dividends, selectively reinvesting them. But it's hard to reduce it because it's done so well. It's just done great. But I include ALTRIA in here still. Even though it's gone up a lot, the forward PE is still only a 10.92. I put it only at 5%. Look, if this is trading where it was in late 2023, early 2024, maybe I'd have this up there at a, say, 10, 15, 20% allocation. But it's expensive now for ALTRIA, so I have it at only 5% or $500. But I include it there because I know in these types of times where things are volatile, consumers, investors too, they go towards companies like ALTRIA because they're dependable, because they offer a simple pleasure that consumers can enjoy, and they offer those dividends. Show me the money. The money is there. It's the dividend. It's starting yield of 6.94%, and they're increasing the dividend by nearly 4% per year. I think they'll keep that up in that kind of 4% range, 3.96. So that's really where I'm at right now with this portfolio. Overall, starting yield on this portfolio is 3.78%. On the dividend growth, I do a simple average because I don't really have the dividend growth of SCHY at this time. And I think some of the future growth of the tech positions is underweighted, but the dividend growth is 4.44%. I actually think that's understated. Of course, dividend reinvestment boosts the snowball over time, but that's where it's at. And so, This portfolio is a reflection of me, my personal situation only, how I'm viewing the world in 2025. More than anything, why I share these videos is to share with all of you at home who have been following me for so many years, thank you, how I've evolved, how I'm looking at things the same as before, but also how I'm looking at them differently than before. So before I go, I have just a few takeaways. As you can see on the screen, the big takeaways, again, I have 65% in ETFs. Did you think I'd ever get there? I have a simple average of PEs in the 13s for these positions, and I don't have PEs for some of the ETFs, but just kind of a rough, simple average in the 13s. This is lower than it's been in a long time, and that shows me that there is some value out there, and I'm capitalizing on that value in this sample portfolio. The starting yield is 3.78%, which is kind of where I've always been in this. My range for my portfolio has always been somewhere in this range. Honestly, it used to be a little lower, like kind of 3.25%. It's grown over time. My goal state would be more like 4%, but hey, 3.78%, not bad. But what I would say is this would be 5.16% without these future positions. So one way just to boost short-term yield, let's say if I wasn't banking on the future as much and I just wanted to enjoy cash flow immediately, maybe I'd remove Alphabet and SCHG, and that way I'd get a starting yield of 5.16%. But what I would say, for me at least, there's no real shortcuts. It's a long, hard journey, and with a starting yield in this range, it takes a lot of years, it takes a lot of snowball to get the cash flow I need. But it's possible and it works. I've seen it work. I'm already using the dividends to pay some bills. So I get a dividend CAGR of 4.44%. I think it will be higher than that most likely for the reasons mentioned. But the biggest takeaway, I would say, it's a long journey. 10,000 is a starting point. Obviously, with something like this, it takes years of dedication. It takes the snowball effect. I'll link to that in the pinned comment below. It takes a lot of capital, a lot of sacrifice, a lot of hard work, but it is possible. And I'm already enjoying the benefits of the dividend journey. And so put in the comments below what all of you think about this sample portfolio. And before I go, in terms of full disclosure, I am long all of the positions mentioned today except one. And that's SCHG, the high growth Schwab fund. I am long SCHD. I am long SCHY. I am long PepSICO, ticker PEP. I am long Alphabet, ticker GOOGL. My wife is long Target, ticker TGT. I am long Pfizer, ticker PFE. I am long ALTRIA, ticker MO. I own those stocks in my personal portfolio. My wife owns Target. In terms of a friendly disclaimer, today's video, it's not investment advice. I'm not a licensed investment advisor. I'm just sharing my journey here with all of you on YouTube for fun and entertainment. If you're going to go out and invest in the stock market, please consult your licensed financial advisor before making any financial decisions. It's possible to lose money in the stock market. I always share all of this just for fun and entertainment. I appreciate all of you. If you enjoyed the video today, please go ahead and click the like button. I can't wait to see you in the comments section below, and I can't wait to see you in the next dividend stock investing video.